that is a higher value, we can consider that day as a bullish day. That is current day R3 and S3 is. Hi friends, Chitra here. Welcome to my YouTube channel. Hope you're all doing good. Today we are going to learn what is called Camarilla pivot points and what are the different support and the resistance levels, and also how can we trade using this resistance and the support levels. What is called Camarilla pivot points? Camarilla pivot points are a set of 8 levels that resemble the support and resistance values for a current trend. That is, if you are doing intraday, we will be easily knowing the what is the support and resistance levels for today's trade. Okay, and what are the 8 levels? 8 levels, as the resistance will be having 4 levels, and for the support also will be having 4 levels. That is, support is S1, S2, S3 and S4. These pivot points work for all traders and help in targeting the right stop loss and profit target orders. The most important levels in the Camarilla pivot points are the S3 and R3. S3 is the support and R3 is the resistance levels. What is this Camarilla pivot points? Here the indicator type is overlay. What do you mean by overlay? Overlay means the price is plotted on top of the indicator. That is, here we can see that the candles is on top of the indicator. That is called overlay. Means the price and the indicator is not far. So it is easy for us to understand the levels. That is a support and the resistance level. This is the R3. That is a resistance. This is the R4. Then S3 and S4. Okay. So the Camarilla method was developed by Nick Stott, who was very successful bond trader. What makes it better to use is the Fibonacci numbers in the calculation of these levels. So that is very useful in our daily trading. So for intraday traders or the swing traders, they can use this levels for trading. This Camarilla pivot point help us to identify the support and the resistance level. Camarilla equations are used to calculate the intraday support and resistance level using the previous day volatility spread. That is, for today's support and resistance, the Camarilla pivot points use the yesterday's resistance support levels to calculate today's value, that they will be calculating used on the previous day high, low based on the close and the low. That is, Camarilla equations take previous day high, low and close as input and generates 8 levels of intraday support and resistance based on pivot points. Okay, so there are 4 levels above pivot point and 4 levels below the pivot point. So above the pivot point there are 4 levels, that is resistance 1, that is R1, R2, R3 and R4. And below the pivot point the levels are S1, S2, S3 and the S4 levels. The most important levels are S3 and S4 and R3 and R4. Okay, S3 and R3 are the levels to go against the trend with stop loss around R4 and S4. That is, if you are going long or short, if you are going from S3 taking long position, the stop loss will be the S4, that is the next support. And if you are taking short position from R3, the SL will be the R4, that is the next resistance level. That can be the another swing formed. Okay. While S4 and R4 are considered as breakout levels, when these levels are breached, it's time to trade with the trend. Okay. When the market is at S4 and R4, we can consider that is the breakout levels. Okay. So there is a trend in the market. What is the fifth layer of the Camarilla pivot point? That is S5 and R5. The fifth layer S5 and R5 of the equation, what does it serve? That serves as the target should a breakout through S4 or R4 to occur. So here this is the R4 level. If you are entering into the long trade, so what can be the next resistance or what can be the next target? The target can be R5. And if we are entering into the S4 breakdown, okay, so what will be the next support? That is S5. So if you are entering into the long and short, that is breakout or breakdown trade, then R5 will be the next resistance, that is the next target for long, and S5 will be the next support, that is the support target for the short trade. Now we can look into the Camarilla pivot width analysis. So what is called width analysis? That is the distance between the R3, S3. Okay. So if the width is more or if the width is less, how the market will be? That is whether the market will be trending or range bound. So what this analysis will help us? This analysis allows you to prepare for certain types of trading scenarios and utilize specific exit methodologies depending on the width of the pivots. Okay, so pivot width plays an important role in our ability to anticipate the market behavior. By looking into the pivot width, we can able to identify the market behavior, whether it is bullish or bearish. Abnormally wide pivot width usually leads to trading range activity, while an abnormally tight, or if it is a narrow pivot width, that will leads to breakout and trending behavior. In the scenario 1, that is the distance between the R3, that is the resistance, S3, that is the support. If the gap between R3 and S3 is wide, okay, one can consider as a range bound day or it is a sideways day, because we can see that the distance between the R3 and S3 is more. So in that day, that will be like range bound day. So by looking into the R3 and S3, we can come to the conclusion that market will be the sideways today. Here in this example, we can see that the gap between the R3 and S3 is more, that is wide. So that is a range bound day. You can see that from here the price is going above R3 and after that it came below. But what happened? The price didn't touch the S3. So this is called the range bound day. So we will not be seeing any trending on, that is the market is bullish or bearish, will not be able to identify during these types of R3 and S3. If the range is no more, that is the gap between the R3 and S3 is more, that is considered as the range bound day. In scenario 2, if the gap between the R3 and S3, if it is a narrow range, then one can consider that as a trendy day or it is a breakout day. So here we can see that the distance between the R3, that is the resistance, and S3, that is the support. The distance between these two is very narrow. So that can be considered as a trendy day. Here in the scenario 2, if the gap between the R3 and S3, if it is narrow, okay, one can consider as a trendy day. You can see in this example, this is R3 and this is S3. Okay, so here the gap, that is gap between the support and the resistance, is very narrow. On that day what happened? We can consider this as a trending day. Okay, so after that R3 breakout, we got the next resistance, that is R4, and we got all the targets achieved on the same day. Okay, so this is how we can identify using the R3 and S3 width analysis. If you are able to identify the width analysis, we can able to judge how the market will be moving on the same day. Two important relationships, that is, this is the previous day R3 and S3. This is the current day R3 and S3. Okay, so if the current day's R3 and S3 is above the previous day R3 and S3, that is a higher value, we can consider that day as a bullish day. That is, current day R3 and S3 is above the previous day R3 and S3. One can consider that as a bullish day. Okay, so here we can see this is the support. S3 is above the previous day R3. Then that is called the trending day. That is called the bullish day. Market is bullish. So here is the example of previous day S3 and the current day S3 is above the previous day R3. Okay, so that day it was a trending day because market opened here and after that we can see a rally in the upside movement. So that is called bullish day. So in the same way, if the current day S3 is below the previous day S3, it is called lower value, or we can consider that as the bearish day. That is the current day R3 and S3 is below the previous day. Here this is the R3 and this is the S3 of current day, which is below the previous day R3 and S3. So this can be considered as the bearish day. So here we can see an example for the lower value, which is the current day R3 and S3 is below the previous day S3. So this is the previous day S3, and on the next day, that is the current day, we can see that the R3 and S3 is below the previous day R3 and S3. So that is considered as the bearish day. So we can see that after that we can see a nice fall in the market. Okay, nice fall in the stocks. You can use this strategy for stocks and for the index also. Okay. In my upcoming videos, we can see how can we trade if the price is in between R3, S3 or if the price is between S3, S4 and also if the price is between R3 and R4. So we are getting confused how can we trade with this different resistance and the support zone. So I will upload a video how can we trade if the price is between these resistance and between the support levels. Okay. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.